Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, February 1st. All right, well, we did get some movement to the downside. I do think the last 2 days have been really a non-event. Volume has not been confirming for whatever volume that we quote we do have. So I wasn't too excited about any big push to the downside. We did get some buying coming in at the end of the day, like we have been every time the market does go down. Buyers that dips steps in, but we did get a little bit more buying because of the mutual fund inflows that I mentioned yesterday morning. I said be careful if you're looking to short the market today. We had mutual fund inflows come in, and they usually come in pretty much in the morning a little bit, and then just about the end of the day, around 2:30ish, before they close their book up for the day, and that's exactly what happened. We also have mutual fund inflows that will probably come and continue today, and maybe even till tomorrow. So usually a day or two before, a day or two after the first day of the month, and then of course the middle of the month as well. They have to put new money to work as well. So where do we go from here? Well, Apple reported yesterday, and I don't understand. I looked at the report, and it was in line. It was no massive beat. They did sell more iPhones, but again, where's the innovation? Where's the new products? I don't see that, and they really didn't do much as far as their numbers. They just they guided, their guidance was in line, and their numbers were okay. I mean, it was nothing great for a stock to move 5 points in the after hours, but nonetheless, that's just me. Anyway, that also put a bid into equities, and we are now up handsomely, about 5.5 handles going into this morning's opening. So could this be now? Could Apple, and now Facebook comes out at the end of the day today, and Amazon reports tomorrow. Now Google missed and disappointed, but we still didn't get any reaction. It's so funny how everything is one-sided, right? Well, Google didn't miss, one of the biggest companies in the United States, as well as Apple being the biggest, but we had a little bit of a blip that was it, buy the market back up again. So remember, use caution, guys. Volatility lies ahead, and that's going to create opportunity for those who are prepared. And this is what I'm trying to point out in these videos going forward. Doesn't mean you can't buy the market intraday. All I'm saying is that when it does move and turn, it happens very, very fast, and I think we need a catalyst here. Janet Yellen confirms today at 2 o'clock FOMC rate decision, and then a meeting. I think she's probably not going to do anything. Watch the bonds, watch the dollar, and of course equities, but I do think that we have some extreme volatility that will be lying ahead. I want to quickly cover crude oil. Had several emails yesterday. You could touch on that again. We're looking at the OVX, which is the volatility index for the oil, crude oil, and we're really ready to explode here, guys. Remember, we're at the lows here. When you're at the lows and you see these bands really start to tighten, you have to be careful, because we're ready to make a move. And if you see how we are here, and we're elevated now as we are here in USO, and this is just the proxy for this for the volatility index. What happens when we start to rise in volatility? We have a decrease in price. So we're at these levels again, and I'm going to show you crude. Let's take a look at it right now. As a matter of fact, here's a year of price action, and we've been stuck in a range for 2 months. And this is what I was saying on my last couple of videos. $55 needs to take out $55 and hold for a couple of days, or $52, okay? And then of course the round lot number of 50 right here. All right, we're stuck in a range, so there's got to be a catalyst. I would not trade this at the moment until we either break out of the range or break down from the range. So to me, this is wasted money and time to do to really actively trade. And even if you are going to trade it intraday, because they do have some moves intraday, there's so many other instruments or asset classes, if you will, or stocks that actually move much better than what crude oil is doing right now. Okay, so keep an eye on things. Remember, I mentioned the commitment to trade reports are the most heavily shorted in over a year. That's telling me that the producers that take crude oil out of the ground, they're hedging their bets. They're hedging their inventory, saying that 55 is probably going to be it for now. Okay, so if that's the case, I would not be looking to get aggressively long crude oil here. If anything, I'm looking for lower prices based on that report. All right, and again, not a timing tool, but it is something that you should be watching. If you are long, I would be watching closely and tightening up stops, because They know more than all of us do. So just keep that in mind. 10-year, let's take a look at some rates. Here's the 10-year right now. Actually looks like a nice little head and shoulders pattern, right? Neckline here coming in about 235. But again, I do think that rates have made a generational low back in July, and I do think rates are moving higher. So if you are looking to buy that house, start looking to lock in your rates, guys. That's for sure. Next, it's going to be the TLT, and you can see clearly here we have a downtrend. The bonds have broken down. I mean, there's no question about it. If you look at the weekly chart, daily chart of the ZB or of the USB, which is the 30-year, you could see that it clearly has broken down. Now, in the short term, you could still look at this, and I mentioned this yesterday, that this looks like a nice little bull flag, that we get a little bit of a breakout. Maybe we test the top of this gap area of resistance, and then that's when I think that's probably going to be it. That's the 200-day moving average in green, and then I think we see lower prices. I do think we see lower prices in any big areas of retracements. Anywhere into some good resistance is an area where I'll be looking to short TLT. Not that you can't buy it on an intraday level here at the moment, because it is basing and creating that higher low here. So we'll see. Still needs a little bit more work, but again, I'm watching the TLT closely here. Here's gold. Gold had a nice big move. It hit one of our targets of 1120. Remember, it was 1120, 1100, and 1080. It hit the first target right just about to a penny, and then we started moving. We had a nice little retracement rally. Remember, gold isn't doing this for no reason. Gold is doing this because there's uncertainty and there's a flight to safety in gold. But I do think that gold probably, he's a 38% retracement, look to start pushing back a little bit lower. If we do get that fifth wave of this bull market, which I believe that we are officially in, one more big push, and Apple, Facebook, who knows, Amazon, those three companies can actually start to rally the market as its entirety, then I think we get one more big push up. Gold goes lower, and then that'll be where it stops, and I think that's going to be it, and that's going to create that higher low from here, and that's where you want to look to buy gold. Here's a GLD, same thing, same picture, really, basically the same for those of you trading ETF. And here's GDX. GDX looking really, really good, guys. And I showed you that inverted head and shoulders. You can see here, right, bullish pattern. And here's that neckline. We really need to break out at neckline, hold above the neckline for a couple of days, and then really start to go higher. And that's what I think might be happening. If not, even if we pull back in gold a little bit here today based on what Janet Yellen's comments are, we hold this area here, hold the top of this little consolidation, and then move higher, that's also fine. Spiders, we had that island top I was showing you. Most of the indices, the 5 indices that I show you, are absolutely holding their 20-day moving average. So we really need to start breaking down here. We had a couple of days up, 3 days up. We broke back down for 2 days. But again, the 2-day sell-off really wasn't. If anything, I was looking to buy the market itself. Here's that island top reversal that we were talking about yesterday. We have a little bit of a double bottom. New areas to watch in the short term. 226.43 is going to be that little double bottom here. So watch the 226.40, okay, and the top of that channel, 227.80. Watch that that's going to be your range for today. Transports, UPS reported yesterday, guided lower. So it broke its 20. This is our leader, so let's pay attention to that. Remember that little area of support here. 161.11 is going to need to break to see lower price, and if that does happen, we'll flush all the way back down here based on our volume profiles. IWM, bull flag, bottom of support was holding along with our proprietary price channel. So the bull flag is still intact. If we lose it, then I think we'll see lower prices as well. So the markets is really at an inflection point, and really is going to need to either break out or start to break down again. Now, with Apple being weighted in many of the ETF indexes, we could really push higher again, and that's where I'm looking for. I'm looking for that challenge the highs, take out the highs, S&P cash 2350, and then even go even further. Get everybody long, no one here to buy anymore, shorts capitulate, and that's the end of the bull market run, guys. And that's what I'm looking for sometime in the near future. I cannot tell you a time. I've gotten a bunch of emails as well. Oh, how can you know? How do you know? I don't know. Nobody knows. What I can tell you is that we are on our fifth and last leg of this bull market run. That I can tell you based on technical analysis. So you have to be careful, use caution, because at any time the fifth wave that is deemed completed, and no one knows but the Mr. Market. And when it does start to roll over, we get a pullback, which goes into a full-fledged correction. And everybody's looking to buy the dip, but there's no one here to buy the dip because the shorts capitulated and the longs have fully invested at the top. Okay, so just be careful out there. See you tomorrow.